Governor Amando Tetangco, Governor of the Central Bank of Philippines, is a repeat winner for us, but again this year is among the top bankers with the highest rating. Now, I would like to start by asking you what is the state of the Philippine economy, particularly in a moment where everybody's talking about the issues with the emerging markets.
Well, the Philippine economy continues to do well. In the second quarter of 2015, GDP grew by 5.6%. The growth in the second half, the third and fourth quarters, is expected to accelerate with the increase in government spending. So for the whole year, 2015, the expectation is that growth will likely be within the range of 6 to 6.5%. Now, on the other hand, inflation has been very much under control. In fact, inflation is now running somewhat below the target range of 2 to 4% for this year. But we expect inflation to gradually inch up towards the end of the year and into 2016 and 2017 as a result of the expected impact of El Nino, as well as pending petitions for utility and electricity rate increases. So for 2016 and 2017, we expect inflation to move within the target range of 2 to 4%.
Is Philippines an exception among the emerging markets? Are you more resilient than most?
I think one can say that given the performance of the Philippine economy to date relative to the performance of some of the countries in the region as well as outside the region. The financial markets have been affected by the volatility that has been experienced globally. But in terms of the amount of depreciation of the Philippine peso, for instance, it's one of the least depreciated in the Asian region. And in terms of the rate of volatility, it is one of the least volatile currency in the region. The stock market has also been affected, but there's been some recovery, partial recovery of the equity market in recent days. What we have seen lately over the past week is that because of the anticipated delay in the Fed liftoff, there's again risk-on behavior by investors. And we've seen capital flow in again into emerging markets in Asia, including the Philippines. So over the last few days, we have seen the Philippine peso appreciate together with the other currencies in Asia.
Governor, speaking of assessment, can you give us an assessment of what these meetings in Lima of the IMF and the World Bank are? What is the climate? What's the atmosphere? Or do you share the concern about the emerging market growth more on a macroeconomic level?
Well, I think there is some concern with respect to emerging markets. I would tend to share that assessment. So the risk is probably now less on the advanced economies because there's been some improvement. And the risk may have increased somewhat in the emerging market space. But within emerging markets, there are differences across jurisdictions. And in the case of the Philippines, I think the performance of the economy that has been noted by credit rating agencies as well as third-party assessors as something that compares very well with the rest of the emerging markets.
One last question. So given this assessment, what worries you most at this moment? The Fed raising rates, what happens in China? What is your main concern?
Well, for us in the Philippines, the most immediate concern is how the Fed action is going to affect financial markets. This is in the short term. In the longer term, any increase in any normalization by the Fed is a positive sign because it shows that the U.S. economy is growing and that the Fed sees that the economy can afford an increase in interest rates. But in the short term, there'll be volatility. So we continue to watch out for that. But we have the tools. In fact, what we did last year was already to adopt preemptive measures. We tightened monetary policy last year, second and third quarters of last year, in anticipation of the Fed liftoff, and also to guide the market and make the market realize or remember that the low interest rate environment caused by very expansionary monetary policy in the advanced it's not something that will last forever, and that they should keep in mind that they need to price risk correctly and properly. So those measures that we adopted last year are still in place. We have not unwound them, we have not reversed them. But China is also concerned, particularly for the region, in terms of possible impact on trade, particularly. Um, in our case, we do not see the direct impact to be very significant. We trade with China, or exports in particular, account for about 10-11% on average. Uh, our export markets are fairly diversified, and we think that if there's recovery in the other markets like the U.S., Japan,
Can make up for what?
can make up. But what is what needs to be watched is the indirect effect, because if China slows down and third countries are affected, which are also export markets of the Philippines, then that can have a knock-on effect on us too.
Yes.
So you know, we need to monitor all of this. But I think at the end of the day, the Philippines really, in terms of the external accounts, has had a current account surplus for the past 11 years. And also, therefore, there's a fundamental strength in the external accounts of the Philippines. And the main factors behind this current account surplus are remittances from our overseas
From
workers
overseas, yes.
and receipts from the BPO, the business process outsourcing sector, which has grown. In fact, it is expected that by 2017, revenues from BPO would probably match the
The remittances.
remittances already, and thereafter exceed the amount of remittances. So these are two major sources of foreign exchange that have kept the Philippine current account position in surplus over all these years.